afternoon, everybody. How you guys are doing? Hope you have a fantastic, beautiful Thursday. It's time for another episode of Let's Talk Trade.
Yes. Thank you, Dorothy, for having me. And I also like to extend my greetings to the participants. And yeah, let's get going with it. I see our dear friend Bassem also has joined today. Welcome, Bassem.
So yes, welcome Zach, welcome Charlie, welcome guys. It's so nice to see you. Hi, Aniki. So for today, looking forward to this discussion. Just some logistics for us. As we know, the chat shall be open for any comments or things that you would like to add in. We do read the messages as the meeting go on. So, and then we'll basically, adhere to what you are saying and bring your questions into the discussion. So please feel free to comment away. Okay, so all in all, let's get cracking. Where are we? We will be talking today, I think, a nice topic, which is all about looking at same size or different size company, same problems. In essence, we have seen that we have worked over the years with big multinational companies all the way to, small startups. So when I talk about startup, I'm talking about entities, businesses, let's say up to $1 million, maybe 2 million in revenue. This is startups trying to figure out their service, trying to figure out their global strategy, trying to figure out what their products will be taking to market and so forth. So we've worked with these kind of smaller companies that wants to go to market or operating in a market and having challenges. On the other side, we've also worked with larger organizations, which I will call mid-size. So that's your companies here between, let's say, 10 to 100 million in revenue. Could be up to, let's say, 200 million in revenue. And then once you go past that point, you go into the big multinationals, $250,000, $500,000, $1 billion, up to, we've worked with businesses of, 50 billion. And it's interesting to see that no matter the size, the same problems arise. Look, I actually rhymed. So in essence, no matter the size, the same problems arise. So, and I think that's really what we will be talking about a little bit today. So Becca, do you have any thoughts on that, or something to start with there?
No, yes, the challenges might be similar, but I think the scale might be different in terms of the size of the challenges, and then how they also approaches in addressing those challenges might be different, because they not only because they're different in sizes, but from company to company, their policy, their way of looking at the markets they're in, their partners, their customers is different. So yeah, that also is important to consider in our discussion today. But I think another thing also, we always say and focus on our trade gear, the 9 piece of position, the whole piece that we've talked about, starting from people all the way to parties. Cross-border trade falls within those P's, and anyone who's involved in cross-border trade, they need to have people, they need to have product, they need to have permits, they need to have policies, they need to have paperwork, they need to have processes, they need to have also deal with parties. So whether they're big multinational companies or mid-size or a startup, they all need to go through this 90s of precision process. So yeah, similar, but different in application.
Absolutely. So today, guys, what we will be doing is, because a lot of times we focus on the multinational, let's say, logistics organization. I think some of our previous discussions was a little bit focused more on the logistics side of things. So in this discussion, we'll be focusing quite a bit on the manufacturer side. So in essence, as if you're joining here from the manufacturer side, of course, you can take away from where your vantage point is and looking at the problem or the discussion from the manufacturer side, whether you are a small manufacturer or a large manufacturer. If you're sitting here and coming from either a consulting perspective or a logistics side of things, listen to these things, because this is the problems that exist in the market. This is things that we've seen. So this is things that you can learn from this experience, and how you can help your customers, how you can help the people that you're consulting with. And this is the problems we've seen and what you can learn from them to apply, whether it's a small company or a big company, what they face. So in essence, we'll be mostly focused on that. Secondly, another piece of, just to caveat the scope a bit, we'll be focusing on, we've helped small companies and large companies penetrate markets. So that means go into new countries, and whether it's a big launch, launching of product like what we discussed last time, or whether it's a one country launch. We help now a few companies in like just one country launch at a time in the startup field. That's very interesting. But what we will be doing today is we won't be looking at launch, because we last time in the list of trade looked at launch. So today we'll be looking at operating. So meaning products already launched, countries already operational. Now, how does these two type of problems or entities deal with these problems? Okay. So hi, Taju. Nice to have you with us.
Hi.
Okay, great stuff. So basically, I think what Becca just said, so if we look at why does startups and multinationals face similar challenges, and I think Becca already nailed it. It's because they move stuff cross border. Whether you're big and whether you're small, you're up against the border. So you need to do it right. The country dictates, and it's basically you need to follow the lay of the land. So whether you're small, you need to do what is right. Whether you're big, you need to do what is right. So there's never, it's always right to, it's never wrong to do the right thing. So meaning both companies have to follow the law, but they follow it in different ways. Their approach to achieve that objective is slightly different, and that's where scale comes in. So they have, if we look at the what we said before, right? These companies, if we look at the blue blocks, trade gearbox, they have the business gear. All of them have the same business environments. They do have management, product development, sales, finance, legal, operations, systems, customer support, and compliance. They all have that, whether it's big or small. When it comes to trade, they all have this trade strategies gear. They all need to figure out how they're going to operate in this market. Is it via no solution, direct to market, direct to customer, using a distributor, using a representative, whether it's having stock locally and having a non-resident type of situation, or whether it's a permanent establishment. Everybody knows they have to pick one or pick multiple, but they need to know how they do business there. So how do they operate? Last thing is they need to know how to manage their trade. And their trade gear is following the 9 pillars, right? Which Becca already said. People, product, policy, permit, paperwork, process, performance, partners, and then they have to manage the parties, which is the government. So the thing is, these gears apply to you, whether you're small or whether you're big. It doesn't matter. All of them are the same. So I think, Becca, for me, what I've seen over the last 12 years the biggest difference between large and small, in my opinion, is people. Smaller companies have less people, less resources, and more people stretched thin across that entire trade gearbox. So you have, the first thing is there's not enough people to know everything about everything. And in a big company, you have too many people. Everybody has an opinion. Everybody needs to be asked an opinion. So in essence, there's so many people inside these gears all getting their fingers into this problem. So that's what I've seen in so many companies. Is in a small company, if you deal with a smaller business, they don't have enough people that know on how to operate in a country. They lean a lot on each other, but half of the time they don't know what they don't know, and as a result of not knowing what they don't know, they keep on running into problems. Whereas in a large organization, they kind of know too much of what they should not know. And they all have opinions about how it should be. So in the end, there's as well a people problem. There's too many people that all have an opinion on how it should be going. And in essence, that creates quite a bit of tension when you do business with small or large, because you need to achieve alignment to achieve trade objectives. What have you seen, Becca, is one of the biggest challenges?
Yeah, I think just to add on what you said, just to dig in further, also that if we've seen in the market with the companies that we've worked with, also at times when it comes to people, they are experts in their field. They know what they need to do, but they work in silos, which means that they don't, work together with other departments or colleagues. So there's no cross-functional alignment and understanding of interdependencies. For example, compliance might not really know or understand what are some of the areas that will affect their work when it comes to, for example, the operations department, or when it comes to finance department. How do these three departments within a given company, whether they are startup or mid-size, how do they talk, and how do they solve the challenge that they face in a given country that's already operational? And also, when do they escalate one challenge from, let's say, from operational to compliance, and then from compliance to legal or to finance? They might not have that structured way of communicating and structured way of handling challenges, not because of what they're facing externally is something that is simple or easy, but because internally they're not well organized, or they're not well gelled, they might have that challenges. And this also leads to challenges, especially this is often seen on smaller companies, that the issue of standardization or process systems synchronization with their partners might also be not there, because they're more in nature, they're agile, they go and adapt as they face challenges and successes in the market that they're operating. And so there might not be a well documented standard that they follow in a given market. And also, I think if we take this similar type of challenge, yes, the multinationals or the big companies have standards. They have very detailed SOPs. They have very detailed, contracts, agreements with their partners, as well as also they know more about their business model and how to go about it if they face any challenges. but the challenge also sometimes falls with their knowledge is very general or standardized. So that means that they might miss the nuance in in that given country. What is their requirements in terms of standards? Even though they know that they might get that as a result of relying on their partners, but sometimes they might not take into consideration the cultural aspect of it, and how do the people do business in that market might be not in their radar. So these are some of the challenges that we've seen. Whether it's a big company or a smaller company faces.
Yeah, I think what I want to say as well on top of that. So what I've seen, so guys, we have. So let me give some two case study examples. So we have a customer where they're very much startup. They're before the 10 million mark. But they've been bought by a big multinational company. So they've been absorbed now by a multi-billion-dollar company, but they still operate as a smaller business within this larger group. So it's really interesting. And what is happening is it's almost like they're playing football. So they have this exceptionally strong team. So given that we're anyway in the FIFA World Cup arena right now, we might as well play football, an analogy. So what happened was, and this team is incredible because if you look at this small team, they're in the United States, they're in Europe, and they have some team members in Asia. It's when we look across their team, they are individuals like a strong salesperson, a strong finance person, a strong, let's say, legal person, a strong operational person, product regulatory person. And then what is interesting is when they come to a team, they don't know how to kick the ball to each other. It's like, it's like having a brilliant players on the field. Everybody can kick the ball to themselves and everybody can have amazing footwork and they play fantastic football, but they don't know how to play football together. And that we've seen across so many different startups. And what happens is when a question then comes, how do we import into this country? Everybody sits around the table with their hat on and they bring problems to the room and say, but what about this from my VAT perspective? And what about this from my, product regulatory perspective? But we can do this legal. Yeah, of course, just sell. We need to make money. And the sales guys keep on pushing. And what happens underneath that, they talk past each other. And now you have to think as a consultant or a service provider, you need to read the room and realize they have no idea what they're talking about. Because they are talking past one another. So they all want what they all want, and they all want what's in the best interest of the company, but they don't know how to build that puzzle. And that's where your service can become really helpful to them. So know that. That's what we've seen a lot in small businesses is they end up talking past one another and not being able to articulate. And if you're in that team of a manufacturer, it's very important to sit with yourself and say, okay, what is my sales colleague trying to say? He wants to sell as fast as possible. What can I do to enable that? Or my trade compliance colleague is saying it cannot be done. What I do in sales could help my trade compliance colleague to achieve what they need to do? And that question needs to be trained into a team instead of operating in silos, what Becca said, and operating together as a team. And that I've seen over and over and over in startups. They don't have the knowledge or they don't have the ability to play really well together. So in essence, we've as well seen on the larger side of things, the big organizations, I think the biggest thing that I've seen on the same kind of genre we've worked with big multinationals. So we're busy in projects with big multinational, multi-million-dollar companies that work with a rollout in, let's say, 130 countries. Now, that type of magnitude is huge. So when you have operations in that type of magnitude, your problem becomes different. It's the same. You still need to move goods cross border, but it's slightly different. And what we've seen in that instance, businesses outsource a lot. They outsource, they expect their partners to meet certain standards. However, some of the things that I've seen is because those companies are so big and they know exactly what they want, they almost scope the solution in their contract out of actually being practical. I have read contracts of manufacturers that makes it impossible to do the service because it's so outsourced and there's so much responsibility on the service provider that the service provider legitimately should say no, because it's not possible to operate like that, and which is completely unfair towards a service provider. But big multinationals get away with it because they have, well, brand, and they have the ability to pay. So a lot of businesses then do sign that agreement, but it's not necessarily in your best interest. So in essence, I've seen agreements, if you push back, I've seen smaller companies that is in the and I was as well one of them, a smaller company that pushed back against a large multinational, said this contract is not feasible. I can't provide the service because you don't see the back end of the trade that would enable me to do this. And the big multinational changed the terms. So that's performance. You need to make sure that the multinational, even though they try to outsource and standardize, it may not necessarily work because it's too rigid and too bureaucratic and then too structured that it can't operate in a market. So same problem, both countries want to operate in a market. The one wants to control it, the other one wants to try it. And they both, with their approaches, needs to find a pragmatic approach that would actually work. I would love to beg here for Zach, please do comment in on your thoughts. Charlie, share with us, have you seen differences in the big multinationals, or have you seen any way of working with the small companies, as well as Bassem? I mean, you've seen on both sides. You've seen on the governmental side of things. You've been on the consultative side. You've been on the production side. Please write down your ideas of difference between multinational and local partner, and please touch us. We'd love to hear as well your vantage point from what you see there, where you sit there in the Western Africa. Please do share, guys. Participate in this discussion. So I think, Becca, if we look at common gaps of startups, what would you say is some of the biggest gaps between what startups face and what large organizations face?
Yeah, I think to start with startups and the smaller companies, I think the first gap is or understanding, choosing the appropriate business model for their product that they will utilize or use in operating in a given market. Of course, they have the product, they have the permits, they have the paperwork, the documents that they could use to execute cross-border trade. But then what is really their business model, right? The essence of it, and not only understanding the business model or define the business model, but do they implement the model consistently in that given market is important, because their partners will, if they understand the business model, it's easy for them to implement it on the ground. And also if there is a challenge that arises, as a result of the implementation of the business model, then they can defend, they can, stand for that startup company. But another thing also that comes with choosing the business model, for example, if sales, intra-company sales, right? And non-commercial transaction also might happen if we are only picking up, for example, valuation as a policy. And if they don't have, often we've seen that they have a value for the product, they have a price for the product, but might not have a really well-defined valuation policy that will justify why they got that specific number of value for that product. And sometimes they might have the same value for intra-company transaction. What I mean by that is the company A might have incorporated in Netherlands and might have another sister company in Johannesburg or in Cairo or in Lagos, and the transaction that happens within the headquarter and the sister company, the price might be the same as they are selling it to another customer. Or sometimes they might sell it very different, cheaper. But for all that, what they need to understand is they need to have a justification backed by a valuation policy based on the national law regulation, as well as also if they're a part of the WTO with the World Trade Organization valuation agreement. That by itself, sometimes, as we've mentioned before, because of lack of knowledge or also maybe focus, where are they focusing at the moment? Maybe they're focusing only on sales, and they might come back later on into the policies. But yes, often smaller companies might miss out in setting up properly when it comes to policies in the area of valuation, in the area of classification, in the area of how do they engage with their partners and so on. So that is one gap that I see when it comes to smaller companies. When it comes to the larger companies, I think one of the things that we observe is when it comes to strategy, changing a strategy, they're very slower because they have a bigger bureaucracy. So it needs to go through different levels of decision makers, and at times also because they have board, or they even have shareholders and so on. So the decision making process for a big strategy change and so on that will impact their operation on the ground might be slower, but of course it might have its own pros and cons, as you know, so because the pros is it gives them consistency and to go forward. But if things are not working globally, then they might need to change it, and that change might come slowly. And it's understandable why that happens, because they have a bigger market to cover. The opposite of that would be is the agility that we have observed and seen in the market with startup companies and smaller companies. But the challenge that comes with that is also that they often frequently change strategy without giving it a chance to review it in detail and see why, why, if it worked, why it really worked. If it didn't work, why it didn't really work. What are the challenges? What are the what's the the challenges, or what are the areas of improvement that they need to do. Without giving it a chance, they might really quickly change the strategy, which means that they might not be measuring their success or their failure as a result of that. So these are some of the things that we observed in the market: quickly making a decision on strategies and also execution versus taking um, time to make a decision when indeed the challenge that they have on the ground needs and requires a quick decision.
Yeah, no, I think this very much links in here. I can see here to what Bassem as well said when he said multinationals are always slower in making decisions than smaller and locals do. Oh, absolutely. Yes, and I think that is so true. And smaller companies are more open to constructive participation, as Zach says here. I think that is so. That element, I think, if we deal with smaller businesses, know that they are agile, they can move, but what you need to be conscious of is don't get swept up in their whirlwind of change, because they are constantly changing, constantly moving, and when they solve operational challenges, they get swept up in this operational world of it has to just quick, we need to fix this. So it could be good and bad, the ability. Plus, a smaller company, to your point there, Zach, is more open to collaboration. They're more open to input. But what is difficult there is they're more open to input because they have no idea what they're doing. So it's nicer to work with them because you feel like, you're the expert there at an office. They're learning from you. Whereas it's nice, but it's as well kind of dangerous because they have no idea what they're doing. So they lean so heavy on the partners to tell them what they're doing. And that could lead to risk for the service provider, but as well risk if you're in a company, because they don't check these things. They don't make sure. So I think that it's nice for collaboration, but it's not necessarily good for cross-border trade, where those pillars needs to be executed with perfection. And if they're not, it leads to risk for all parties involved. And on the other side, exactly, big organizations, there's all this red tape, there's all this harsh movement. So what I've seen is they're so rigid that they expect so much of their partners that it's all red tape, slow moving, exactly what we're saying, a long time for decision making that may not be prone and conducive for solutions in a market, especially developing markets. In more established markets, it's better, right? But in things where developing markets need to move more faster, I think it would what big businesses do, they offload on their partners and make that kind of pressure on the partner, which as well is like different to work with, because you as a partner are constantly under pressure. They would treat one in a different way. It's like, you're the partner, tell me what to do. You're the expertise, you're the importer, you're the distributor, you should know this stuff. And there's almost like a language that go together with that, which is almost inhumane in some instances. So finding good manufacturers that is willing to work with you in a humane way, not a kind of a condescending type of tone, is important. And to put the right account managers on your account to manage that expectation that even though you are the expert in the field, it's still them dictating what you have to do. So in essence, there is certain things that needs to work together. And if I bring the other element of complexity between these two companies, normally a small company has one business model or two max, but really one business model going into the market. In big multinationals that operate globally, they have sometimes 3 to 4 business models going into one country. They may have a sales business model going via distributors. They might have a direct business model going direct to customer. They might have a service supply chain business model for reverse logistics. And they might have an internal business model that is for themselves, for their entity over there. And so these 4 different business models makes a trade gearbox machine more complex, which means, and because they're operating in so many silos, with different partners doing different business models, there's a higher risk to create problems due to kind of miscommunication that goes between for every different business lane into a country. Now, when one looks at that problem that gets created, the problem gets created by multiple business streams flowing into a country under different rules that is predefined globally. But from a customs officer's perspective, they don't understand the different business models because it just looks like one company, all the same brand. And now you bring different types of business models into one country, all under the same brand. And those people might not know what the bigger picture looks like. So if there's miscommunication about why is this product being imported, why is this thing's different from those things, why is the value on this different, or who determined classification, this one is X works, this one is ZDP, paperwork looks different on this channel than on this channel because this channel, the distributor is the importer, that channel, the brand is the importer. So things start to look different. And because they look different, but it's one customs authority, you start to have different problems arise because of the difference. And if nobody has the knowledge or capability to understand how those channels deviate from one another and why, it creates scrutiny from a customs perspective. It's like they don't understand it. And it's not scrutiny because they're trying to be difficult. Honestly, customs officers I've come across very limited amount of time really want to be difficult. They're trying to understand. And because they're trying to understand and the people in the field cannot give them the answer, what is the difference? It becomes difficult. Whereas smaller companies don't have that problem yet because they're not that big yet. So they have one channel, they're trying to work. So in essence, I think those 2 problems in a market has to do with complexity. Complexity of a large company, complexity, but as well miscommunication and management. And I think that's more difficult to manage in a big company. So if you find yourself providing services to a large manufacturer in a country, do make sure that you ask what all the business models are that they're operating into this country, because another business model may impact your business. And if you are in a multinational and you are operating in a country, make sure you understand all the business models that your company is operating into that market, so that you can know which other colleagues you may need to reach out to in the business to see if they do something that could impact your trade lane.
I think, Dorothy, another area where I see is a big difference between multinational companies as well as also startup or smaller companies is the dispute handling setup, right? Or how do they settle dispute if that occurs on cross-border trade? When it comes to the startups and smaller companies, they tend to rely heavily on their partner, where they don't have internally that capacity or that if a dispute arises, they might not have an escalation steps, and they might not have also paperwork or policy that be used to defend their dispute. What do they do if, for example, classification dispute happens, what do they do at the beginning, and then if it is appealed and then goes to another level, what do they do? They might not have that structure. As a result of that, they tend to pay and accept the penalties and move forward because they don't want to spend a lot of time and resources on fighting disputes and so on. So as a result of this, what is important for startups is for companies to vet their partners very well, to understand whether the partner understands the local regulations, whether they can represent them and defend them on the ground. They need to really take their time in picking up the right partner that has experience, but also understand their business model. But when it comes to the multinationals, when they face disputes, they're well organized internally. They often have a decision-making tree where they go through it depending on the risk, and as well as also they don't rely only on their partners. They also can get other consultants or other advisors to come on board and solve their challenge and problem. And they often also have internally policies, defense policies, where they have a structured way of, for any type of key disputes, they already know what to do. They have the papers ready and they just execute it in steps and in progression. So that's also another way that I see the differences. But I think the key denominator, or the key factor in we always talk about this, Dorothy, is that in order to avoid a dispute, in order not to get into a dispute, because nobody wants to get into a dispute, setting up your documents, setting up your processes, setting up your contracts, and also setting up, the permits, and all that really is important internally, so that whether they are multinational companies or whether they are smaller companies, they tend to avoid those disputes as a result of setting up well internally. So I would like to maybe extend a question to you, Dorothy, as what will be some of the key areas that, whether they are startup or multinational, especially for startups, they need to look into when it comes to setting up the system from, from a business gearbox or from a trade, from the 90s perspective.
Yeah, I think to your point, Rebecca, prevention is always better than cure, right? And I fully agree with you. I think about 90% of issues in trade can be resolved by better implementation. If we implement the better preparation as well. Because it's in engineering, so I'm an engineer, so when we were always, designing bridges or, a car or whatever, you build the machine for the stress test. So you are aware when you build something, you build it for a certain amount of pressure that thing has to be able to take, and times 5. So obviously, so in essence, you calculate the stress test in when you design. And in the same way of trade, we need to do that. We need to design for the stress. Now, whether the stress happens or not, it's important to have the stress test. So in essence, your biggest stressors that will happen in cross-border will always be documentation, your paperwork. It will be money, so your duties and taxes and valuation, because that's the biggest stressors. So if you think you're building a bridge, what you will load on it, that's that. Your paperwork is your biggest thing that will trigger all of that stress. So, and then what I would say from my perspective, when you look at the cross-border trade, having an immediate defense mechanism of response that can be withstanding that stress is part of the preparation. If you operate and you say, oh, we set up the documents, let's ship, and set up the documents, let's ship, that's one thing. But if you can make sure you implement, let's say you're a small business, or you provide services to a small business on either side, you would want to make sure you help them to set up their paperwork and their processes, that they are able to ship and have all the documents in place for their order going into a country. Obviously, right? Obviously. Who does trade without that? Well, I've seen many customers just ship and, ooh, we actually need a certificate of origin as well for the shipment while the goods are in customs. So obviously you need to prepare. I would take one step further and I would do a stress test to say, what if this document is questioned? 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 And if you're working with a startup, I would, as a service provider, make sure I have the already worded responses for any one of the questions, because the governments can only ask a few questions. They could ask business model questions, they can ask valuation, classification, origin questions, and then obviously a little bit logistics, weights and stuff like that. And there's standard things and templates you can implement for that initial stress test. So it's not giving the whole story, but you can say this value is in accordance with the WTO regulations. Okay, this business model is this business model, that's why it operates like this. You can say standard text classification is in accordance with rule 1, 4, or whatever rule is applied, or it's in accordance with the WTO rulings, so that you have that. Make sure that the customer knows that this is origin is the correct origin of the goods. We have proof of origin. So it's the stress test. So if there's a question, you already have the stress test available, which means if a question arises, you have the answer already, which most of the time, in 90% of the cases, completely eradicate the problem because it can withstand the first stress test. If the stress occurs and then you provide the stress test answer and it doesn't work, well, then there's really a problem. And that's when you can then decide, how do you deal with it? Whether you want to put money on the problem or accept the problem. And, unfortunately, if you accept the problem, you can create precedent, but a lot of businesses need to do that to be able to survive, because if they put money on the problem, they will die. They need to play the business game and take the risk and learn from it and correct it in the next procedure. So say, okay, fine, we release the shipment, we take the penalty, and we correct our processes back home. So in essence, it's part of a growth mechanism to learn from that process. When we look at big multinationals, I have found that they have their own processes. They expect a lot of their partners. They don't necessarily have that strategies in place because they hold off too long to say, partner, you should know, you should know, you should know. And the partner might not know how to defend the stress test. And they use that to vet and validate which partners to use, which I also don't feel is 100% fair. Okay, fine, it's business, and I don't like that segment. It's just business. I think we're humans that have to work together on this planet. So saying everything is business is honestly a bullshit story. So from my perspective, I think as a service provider towards a big company, checking whether they have the stress test procedures in place before you work with them, they should have it, because they're operating globally, and insisting on them sharing that with you is actually a good strategy, because you want to make sure you do things in the way they want to do it. So they already operate globally. They would generally have the stress test documentation in place. So they should be able to share it with you. And if you are a multinational and you're not sharing it with your service providers, well, why not? why are you not helping with the first line of defense to make sure your operations run smoothly? And if you are a startup manufacturer, work together with your service provider to develop that first level of defense, because then 90% of your trade would most probably work without further escalation and disputes, because you have the first document in place. Would love to hear from Zach or Taju, or Bassem, whether you guys think, that's what I've seen, and I've seen how it works, but I would love to hear your thoughts on this, whether you've seen companies have this first line of defense. Do they have the stress test developed, or is it more of an ad hoc thing in the field that we see? So I think dispute management, the stress test example in trade, is really important. You wouldn't want to buy a car that the engineers didn't test. And then the same way, you wouldn't want to buy a service in trade which the service provider didn't stress test, or the customer didn't stress test. I think if we look then to the last 10 minutes, I'm very much open. Please, guys, if you have any questions you would like us to talk about something specific with regards to, small, large organizations.
I think Mr. Taju raised a really an important point here. Sometimes, when you compare SMEs or smaller companies vis-a-vis the international, multinational corporates that are operating globally, sometimes the SMEs might be limited, or the startups might be limited in their own country and their own region, and often the challenges that they might face is not because of what is happening within their own market or cross-border, but globally, when external shocks happens, the way it impacts them is totally different. So the consequence of the way they are facing that specific external shock might lead them to a very different results. Of course, multinationals have the capacity to absorb that external shocks and push further, but often, especially in emerging markets and in the less developing countries, you see that as a result of what's happening globally and the external shocks, they might be really impacted, and they might, lay, as Mr. Taju said, they might lay off, their employees, and they might lose businesses. They might not be paid on time. They might, a lot of things might happen. That is as a result of, what happens due to the external shocks. We can, for example, take the Straits of Hormuz when it's closed. The logistic companies and the shipping, companies, insurance companies, and of course, there is a way has impacted. Whether it's a multinational company or a small company, everyone is impacted. But the actual impact is seen more really affecting small and medium enterprises or startups and so on, especially in emerging markets. I just wanted to mention that. Yeah.
I think absolutely. I think global economic influences have an influence on each one of us, whether individuals, whether businesses, whether governments. It has massive influences on us. But I think what I like to see, I'm trying to be the ever optimist. I think we also have an impact on the global So no matter how small we are, we impact the system backwards too. So therefore, I think we play a vital role in that, and therefore it doesn't matter whether you are currently finding yourself in a capacity of advising big multinationals, whether you're finding your capacity, whether you're advising governments, whether you are in a big multinational, whether you are in a SME. Every engagement and every interaction you have has the potential to have an impact, a domino effect, a ripple on trade. And therefore, I think even though the whiplash of the wave that comes back and hits us, is intense to take as individuals, I think being part of those ecosystems and know how you navigate through them, startups, governmental structures, multinationals, knowing that you have those gears, the business gear, the trade gear, the strategy gear, to your availability in your gearbox, is helping you to navigate, and knowing where the problem comes from. It doesn't matter if it comes from paperwork or process or systems or finance or legal. You can help the people you're involved with to work together to make it work. So I think definitely same problems, different size, but ultimately we can all help work together to solve them. So I would like to close today's discussion. It was amazing talking trade with you guys again today. Thank you so much for participating. And I would like to close today and basically invite you all to our monthly meetup next week, Monday. It's held every Monday, the last Monday of a month. So it will be next week, Monday. We'll have a monthly meetup. Now, during that meeting, if you join, everybody will be on camera. We'll be switching on the camera so everybody can get to know one another. So feel free to join, feel free to invite others as well. And it will be a coffee catch up to get to know one another. So more of a collaborative monthly meetup rather than everybody on text and me and Becca talking. So thank you again, everybody, for joining and for a superb chat today. Wish you a beautiful weekend and looking forward to seeing you guys next week again, or next month.
See you.
Thank you guys.
Thank you so much, everyone.
Bye.
Bye.